Evaluation of misstatements, ISA 450. So guys, although this is a level 2, it's very important. It comes up so often, and they really actually like to test the misstatements for your level 1s. So making sure that you can actually work through a process of how this misstatement needs to be addressed and considered as the auditors. Okay, so we have to make sure we understand it. So first and foremost, I just want to discuss what a misstatement is so that you can see that there are different ways in which something could be considered misstated. Once we understand the different ways, we then need to determine if the misstatement is material, because this is what we are interested in as auditors. Is it material? And if it is not corrected, what could the effect on the financials be? Okay, then like I said, specifically very important for the level 1s, the evaluation process. Once we identify a misstatement based on our definition and understanding up here, how do we go about evaluating it to determine whether it is material and to classify it for our audit report? And then the common questions, all the different ways misstatements can be tested, and then how we go about addressing each of those different ways. Okay, so first and foremost, what is the definition of a misstatement? You can find it in ISA 450. It says that a misstatement is the difference between the reported amount one way, the reported classification another way, the reported presentation another way or disclosure in the financial statements, and what the amount, classification, presentation and disclosure should be according to IFRS. So we're saying it's when there's a difference from what IFRS requires. However, that difference could be in amount, classification, presentation or disclosure. So it's not just limited to an amount. We've got to consider a misstatement from all the different ways that IFRS has said something should be recorded to how it has been recorded. Okay, so because there's different ways in which something could be misstated, we as auditors classify it into 2 categories. Either there's a misstatement in amount, which means it is quantitatively misstated, or there is a misstatement in nature, which means classification, presentation or disclosure. So all those other ways we have in the definition, in which case it is now qualitatively misstated. Okay, so all I'm saying is take your misstatement that you're seeing and tell me, is it because of the amount or is it because of its nature? And then as auditors, we can now work with that. Okay, amount is easy. This is what IFRS says it should be. Versus the financials say 20. Very easy to pick up a misstatement in amount. A misstatement in nature, guys, because you can see it's classification or presentation or disclosure, many ways in which it could be misstated, we've got to be considering the IFRS requirements throughout. And so some examples of nature: non-compliance with the IFRS regulations or requirements in terms of presentation, disclosure or classification. Or if they have selected the incorrect accounting policy, once again, then you would see that it's incorrectly classified or presented or disclosed because of that. Or if a misstatement affects a key ratio and therefore the financial position, operations or cash flows that we use ratios to consider are now misstated. Or fraudulent, if there's a fraudulent misstatement, well, we can see there's definitely a problem. And so guys, the important thing is that there will generally be an amount that gets associated with a qualitative misstatement. But the point of the fact is there is a qualitative misstatement. Okay? And or omission, which would also be considered fraudulent if you are intentionally omitting items from the financials. So when we're looking at a misstatement, we don't only consider the amount, we consider its nature. Is it fraudulently misstated? Does it affect key ratios? And guys, these are the things you need to look at from a MAC perspective. Look at my ratios in MAC and then see, does this misstatement affect any of those MAC ratios? Because then it potentially affects how users view the financials. So once we've been able to split it into those two categories, we are then able to subcategorize a misstatement into whether it is factual, which means there is no doubt that there's a misstatement. It is definitely a difference between what IFRS says and what is in the financials. It's obvious. There's no doubt about it. Judgmental means there's a difference because of an estimate or a judgment. Their allowance for credit losses is 10 Rand, and the auditors believe it should be 100. So there's no IFRS misstatements. IFRS doesn't say it should be this and then it's this. IFRS gives you guidance with estimates, guidance in determining your fair value adjustments, but it doesn't give you the actual. And so in looking at their estimate versus the auditors, there's a judgmental difference. Okay, it's not right or wrong like a factual. And so judgmental is a little bit more tricky because it just comes from where an estimate is required. And there's a difference now with the auditors. And then projected, well, this is where the auditors identify misstatements. When they test a sample, and now they want to project the misstatements to the population. So it's not necessarily a factual misstatement in terms of the population, although in the sample they would have factually identified misstatements. Problem is we're only testing a sample, so you can't just say that's the only misstatements in the entire population. So an example, guys, just so we're comfortable with samples and populations, they are testing revenue and they select a sample of a total amount of 500 Rand. But the revenue in the financials, so the population, is 50,000 Rand. In the sample that they selected, they identified a misstatement of 50 Rand. So now they need to project that for the population. So they say, if the sample has 50 out of 500 misstatements, then what is the misstatements in that population? So you take the 50,000 and you times it by the 50 divided by the 500 and you get 5,000. Now that's not saying that there's definitely 5,000 worth of misstatements in that, but it's closer to them saying that there's only a 50 Rand misstatement in the entire population. So what we're doing is, when we need to discuss the misstatements with management, we go to them and we say, we did a sample of revenue and this was the misstatement. If the sample is a reflection of the population, it means the entire revenue is misstated by this amount. They're not going to go, oh yes, that's correct. They're going to say, no, it was just the sample. It's just a way for us to give an idea of how a population could be misstated. Okay. So this is what we do. We pick up misstatements throughout the audit and we classify them. quantitative or qualitative, and then we subclassify factual, judgmental, or projected in order to take it to management. Okay, so how do we now know if a misstatement is material?